bull market cycles. And how close are we to the biggest one ever? Wait until you see the last image in this program. Stay tuned. Welcome to the Wealth Transfer. Today we're going to talk about the secular bull market that we're in, and I'm going to show some amazing charts and information showing you that we are in one of the largest periods of expansion in almost our history. Wait till you see this, and wait until you see the very last or close to the last image. It's going to be very, very surprising and something that most people will not understand to be true, considering what they're trying to tell us in the mainstream. But remember, we are here at the Wealth Transfer. We are here for the people. We are here to get to the point where here's the information. Now, I know I've been doing this long enough that some people say, well, silver just hasn't moved. Why do you keep talking about it? And folks, I'm just going to keep talking about it until my face is blue, because God laid it out to us very clearly. When Cornerstone was created and then Wealth Transfer Ministries evolved, is to communicate to the kingdom and to let them know. And I don't care what the markets do right now. I don't care that the prices haven't moved a lot. That's actually a good thing, because many people have not taken advantage of it yet. But you're going to be really surprised when you see what's coming. It's about preservation and protection of what you're working for in retirement. And you're going to be surprised in the end of the day. I won't be surprised when this hits $100 an ounce. And if I'm not raptured, I probably see hundreds of dollars an ounce in silver, mainly because the supply and demand isn't there industrially. And then you're going to have a flood into silver because the dollar is going to be so compromised in the future, regardless what it looks like right now and the strength of the dollar, folks. I know. I understand what the financial advisors are trying to let people believe. But wait until you see this data today. I can only tell you these are factual chart points. And for those that aren't into charts, I understand, but I'll do a good job of my best anyway to try to explain what they really mean. All I know is the psychology of the markets and the psychology. Financial advisors, and God bless those that are Christians, but their job is to hard sell. And they hard sell people away from things like physical, tangible assets like silver. And they do it in such an ignorant way because they have no concept of understanding. But the fact is, silver has been one of the best performing asset classes in our modern time, specifically since 9/11, for protection and preservation. And it doesn't matter that the prices haven't moved a whole lot. It just doesn't, because it's about accumulating a tangible asset similar to land, except silver is more liquid, to protect yourself for the future. I can see this next cycle throw out $100 silver and then hundreds of dollars of silver probably before I die if I'm not raptured. So the reason it is so important to me, I even asked God, I said, God, I mean, why even just keep going if it's not getting people's attention? He said, you just keep putting the information out and I'll take care of the rest. And that's what I'm doing here. Wealth Transfer is here for the kingdom's purpose. I will not go secular. I care that the kingdom has assets and resources that they can be protected and preserved with, because when you own it, you own it. It's not in a bank, it's not in a brokerage, it belongs to you, and the protection it's going to offer you in the future when you see these markets collapse and we're going to start all over another cycle like 2008. Again, I believe it's a cyclical time frame we're coming into, bear market, and wait until you see this. So now, the first one I want to show you deals with the historical economic recoveries averaging about 41 months. But I want you to see the red line at the top that says current recovery. The current recovery right now is 106 months. It's only probably by the end of this year, it'll be tied to the greatest expansion, which goes back to 1991. Now, keep that in mind, because this one has been done on the heels of trillions of printed currencies globally. and hundreds of trillions in debt added, bond issued debt to governments and countries. These currencies globally are increasingly losing its value and buying power. And the key is buying power. How much does it buy you? That's all that matters here. And when you see the current cycle we're in, you're going to understand that we're close enough anyway. We may be secular in a bull market, but we're going to have a cyclical bear. And I contend when it's cyclical bears, depending how the world handles it, it could easily be a 40–50% correction. And no matter what, some of you in your 40s, it's not a big deal. But if you're in your late 50s or 60s, do you have time to recover the cyclical bear market like 2008 and then come back to where you were? Because the fact is, the buying power of the dollar over a 10-year period isn't nearly the same. And so you're not protecting or preserving it all, regardless what the number says. So I'm pretty shocked at this. We've had this going since 2009, since they printed trillions of dollars, and we're near the all-time of expansion. Yet we, the people, don't really see that. We don't feel it. Now we're starting to, don't get me wrong. We are starting to see the fruits of our labor. We are starting to see the jobs coming back. We are starting. I think President Trump is doing a magnificent job with policy. I think his abrasive type of behavior, as some on the left would say, how he's rude and obnoxious, or however they want to calculate it, it just doesn't matter. They're going to always say that because most of them are communists or socialists these days. Even Hillary Clinton had come out and said the reason she didn't win properly was because the Democratic Party had gone too socialist and she happens to be capitalist. That's going to be a big deal, folks, because I don't know about you, I don't want to be a slave to anybody. And in this process of expansion, a lot of us did not reap the benefits. We really haven't seen the wage increases. We haven't seen the wealth. We showed that in past programs, how wealth has really gone to the 1 percentile because it's been financial. They've been leveraging. They've been going into the market systems with borrowed money. They've been reaping rewards, but we, the people, on average, have not. On average, we probably have broken even since 2008 and then some. But I want to show you, get ready, because I think we're a little closer than you think to this cyclical bear, which would be a big correction. Now, here's a breakdown of recessions we have had, the time since the previous. So you go all the way back to the Great Depression and then come all the way down to where we are now. 8 years and 11 months since the last recession. And it's amazing to me because we really haven't started to see any true numbers of expansion to we the people, really only over the last couple of years have we started to really see the fruits of that. But when you go down this chart, you realize the only other one there was the early 2000 recession that had 10 years on its expansion. And then, of course, we all know what happened in 9/11, right? So this is a real big deal because we're right there near the all-time. Do we feel like we're near an all-time epic expansive period? Is everybody feeling the oats of wealth in our communities? Are we doing exceptionally well with our youth and with our poor and with our cities and municipalities? If that's the case, why so many cities and municipalities are actually struggling under bankruptcy? Even Chicago. Chicago's getting hit huge with struggling debts, and yet we've been expanding for almost 9 years. It's because it's only the select elite that get to take advantage of that, and we, the people, do not. So this period of expansion is very interesting. But wait, I got to take a quick break, but wait until you see the next image, because if that's the case, shouldn't we be reaping the reward? And if so, what is really foretelling for what's coming in the next 6 months to a year? Wait until you see. We'll be right back.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. Now, this next image is unbelievable. It really is. Here, and it goes all the way back, before I say anything, it goes all the way back to the 70s. But, okay, let me just put it up because I can't handle it. Look at this. This is a cumulative GDP, which is your gross national product, which is what we produce as a nation. Growth less the federal debt issuance. But what's very interesting about this is we've had recessions before. We've had money printing periods. We've had, all sorts of stimulus before. And if you notice from the left side, 1971, when we came off that gold standard, up here until the 2008 timeframe, even during the recessions, we still were balanced in our cumulative production as a nation. We were producing compared to the debt levels. Look at what happened since 2008 to where we are today. Isn't that astonishing? We are at a period of negative, to the point where here we've been in almost a 9-year expansion, and our production, our rate of production, isn't even close compared to the debt levels we have. And as you see on the right side, we're actually below zero. That is amazing, folks. Reason it gets important to us is the cost of a dollar printed and stimulated and put into the system would typically produce something. So if I spend, typically in businesses, we know if we spend money, it's hopefully to produce more. Obviously we've had our failures in marketing, right? Or ideas that maybe didn't work out. But typically when the government spends a dollar, they get a return. But that last image shows you not only are we not getting returns, it's negative. And yet they tell you on the mainstream media, 3.9% unemployment. That's a lie. The only reason they're saying that is because you can only be on unemployment benefits for so long and then you're knocked off. We have over 100 million in this country that are not working. And a lot of them probably never will because they're too jacked up on drugs or alcohol, and that's a real big problem in our nation. And then they show you the GDP numbers, the unemployment numbers. They're just not accurate, and it's very sad because that's what they use to keep we the people in the debt market systems. But this time around, there's something else going on, and this is a big deal. So I want to get in and show you the next handful of data charts I want to point out. Deals with the Dow Jones and the S&P 500. And it's going to go into a weekly, a monthly, a daily, a weekly, and a monthly chart. It's unbelievable because so many people are not only going just now into the markets, a lot of them just entered into the stock market in 2018. And wait till you see these things. Now, this first one is the Dow Jones daily chart. It goes all the way back to, last fall, September. Now, we had a nice little run there from 21,000 all the way up to 26,000. So it's pretty substantial, about a 20% increase in the markets. I like that. The beginning of 2018 in the stock market, we had a fun run up. But if you've noticed right there in the middle, look at that massive correction that took place in February. Then we came up, corrected back, came up. If you notice, the trend line is going down. And the only thing holding it is this 200-day moving average, and this is on the daily. So for all of those that just entered the stock market or preparing to enter the stock market, this is not a good-looking chart. In lieu of everything else that's happening globally, this is a bad position to be investing into. It shows that the higher highs, lower lows scenario isn't playing out. We're actually having lower highs and higher lows kind of scenario. Just you can see how it's just teetering on the 200. Now this is on the daily of the Dow Jones. Now look at this one. This next one will be the S&P. And the S&P is doing exactly the same thing. Look in the middle from 2018. This is on a daily. We had a nice little run up from about 2,600 to about 2,800 in the S&P. And then if you notice the big radical sell-offs, run back up, sell off, run back up. But you notice the highs are not going any higher. And it's bouncing off the 200-day moving average. Now, this is the S&P 500 daily. Folks, if this economy is doing so well, if we're blowing up and expanding, unemployment is booming, everything is great, that chart would look a lot different, and it doesn't. This shows you we are in a corrective phase, and it probably lends hands to what I just said with the expansive time frame. Time's up, and we just have the cyclical sell-off that's going to come in. But a 40% sell-off is a big number. If you have $100,000 in your account and you're in the markets and it sells off 40%, you have a value of $60,000. In that same period, when the stock market sells off, silver is selling right now at $16, $18 an ounce, will be worth $30, $40. It'll go up 100%. No comparison to the gains people are fighting so hard for in the stock market. So now I want to go into the Dow Jones on, I believe this one is the weekly. Now they have a little bit of different twang to them, the daily, the weekly, the monthly, but you're going to get the image and it's going to be pretty stark. This is the Dow Jones weekly. And if you notice, it goes all the way back to 2015 when this bull market, secular bull market, probably began. And you notice between 2015 and 16, we're kind of flatlined. It just kind of went along. And then boom, the Dow Jones shot up from 18,000. That was the Trump effect. The stock market was at about 18,000 when Trump came in, and then it's just boomed from there. But if you've noticed, it boomed all the way up and just now is coming down. It's lost its energy. Now that first one is a 50-day moving average in the blue line, but look at where the 200 is, folks, on the weekly. That's down to 20,000 in the Dow. That's another 30% drop just to get to the 200. And that is small compared to what possibly could happen in a sell-off. Because remember, a lot of people are in margin and credit in the markets, and those bulls got to get through the gate first because they can lose everything if you're in margin. Now here is the, I jumped right in and went to the monthly for the Dow Jones. But look at the image going all the way back to 2004. And then you see right there kind of to the left side, that is the big market sell-off we had in 2008. But what's staggering is the sell-off in 08 was pretty, profound for most people. You lost a substantial amount of your wealth at the time. Of course, not only that, what silver did during those periods was unbelievable for those that were properly invested. And then look at the expansion. On the monthly chart of the Dow Jones right now, it's not even close to the 50-day moving average. That's the first target. That's 19,000 and change, as we said. Look at the 200-day in the red line. That's down to 14,000, folks. That is where this whole thing started before the 08 collapse, and then it came back. I contend we have an extreme probability that if it doesn't play this out right, we're definitely testing back to that 14,000. And if we do, that is well over a 50% correction from here. And that is a huge deal to get stuck into. And are you prepared for that? Are you diversified enough? Does your financial advisor tell you you're diversified? Because you know what they'll say? Yeah, you're diversified in the markets. You're diversified in paper. And if you think you're getting out, good luck. And unless he's a real strategic advisor, he's not going to have you in contrarian investments right now. He's just not. Or she, for that matter. They're just not. But there's a big deal because when this sell-off takes place, you're going to have explosive prices come into silver. So I got to take a quick break, and then we'll jump in and wait till you see what's coming because this is the good stuff. I'll be right back.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. So the next chart I want to get into will be the S&P. I believe this one is, yes, this one is the monthly. I talked to a lady the other day, and she said, in the last 7 years, my $30,000 is still only worth $30,000. He had me in an annuity. And I said, ma'am, that is just horrible. I said, you know, the bottom line is the markets had, in the last 7 years, have gone up substantially. Your $30,000 should be at least $60,000, if not more. But why did they do an annuity? Because advisors don't make a lot of money these days. They can't do the commission churn and burns like they used to. So they do annuities because they're really big commissions. But you take it on the chin in buying power. Because the annuity over a 10-year period doesn't buy the same, your dollar amount's the same, and yet you've lost substantial in your wealth. So she's going into silver, which I'm thankful for because she recognizes that. But can you imagine in this massive expansion we've had, her $30,000 is still $30,000. Now, this is very typical in these type of expansions because, you know, God bless the advisors. I'm not, you know, picking on any specific one. But they're part of a system. They're part of the fiat, regardless if they're Christian. They're still educated by the system in the fiat. They don't have the flexibility to go into tangible assets. And I don't care at the timing of it because tangibles will always maintain that buying power over time. But check out this S&P. This is the monthly. Now you can see it's not even close to the 50-day moving average. And then you can see where it comes down to the 200-day. That's right, folks. That's 1,600. And that is literally 40%, 50%. That's a massive amount of your wealth. That's why I always advocate, no matter what, you should have a third at least into tangible assets for the long term. And for those that really care, if you don't need that money, talk about inheritance to the children's children. Silver is going to be worth hundreds of dollars an ounce in the future because it's the only commodity next to crude oil that, second actually next to crude oil in demand industrially. If you knew how valuable silver was for the industrial complex and the fact that we're running out of it globally, you would know in the future, 10, 20 years, there's not going to be any silver. And the wealth factor, the wealth transfer of it will be staggering. But, you know, here's an image I just can't even get around. This is known as the U.S. productivity growth. And before I put it up, I want to prepare you for this because if you're not paying attention, stop talking and look at this one. This is unbelievable. Here we are 9 years into an expansion period. Trillions upon trillions of new currency created. Trillions and tens of trillions of debt added, 150 trillion globally, all the cities and municipalities that are near bankruptcy and the debt burdens they have and the medical burdens and premiums we have. Why is medical burdens and premiums so high even after Obamacare's great socialist Marxist agenda? It's because it was never designed to do what they said it was. He lied about everything. Look at all the average middle class people that are just getting their teeth kicked in on premiums. And why does it cost so much? Because this doesn't buy you the same. That's why. This is productivity growth. And this goes all the way back. I'll just put it up. All the way back to 1980. And if you've noticed, We have ups and downs for the most part, but here since 2000, even though we had a dip there in 2008, we had a big expansion there for a couple years, 9 and 10. But look what's been happening over the last 7 years. That's right. Very little percentage change of GDP per hours worked. Very little gain to the point right now we're negative. Negative. We're not productive as a nation right now. All the mainstream media is lying to you. This is about as factual as it gets on our ability as a nation to produce. And then you have China and Russia nipping at the heels of the petrodollar and the dollar's financial strength and prowess. They're starting to blow us off. The world is going away from the dollar, folks. And when they do, it's going to happen overnight. And if you're not prepared, you're going to lose a substantial amount of your wealth. That's why being diversified is absolutely paramount. Why I like silver, number one, because it's biblical and it's constitutional, Article 1, Section 8. We, the people, should have always been saving silver. And check out this next one. It's one of my favorite images as far as capital flow. So here we are in a 9-year explosive expansion into the stock market, into the economy. Most people have not benefited. And look at the low level of commodities as undervalued. It is the most undervalued in decades. I'm talking even more undervalued than 1999 during the tech bubble burst. Then we are more than undervalued in commodities. And that'd be everything, of course. It'd be your grains and oil and gas, and cotton will be amazing. But it'll definitely be this too. But look at how low the valuation of commodities are. Real smart investors want to take advantage when you see these epic peak periods. You want to start shifting out, 50% at least, out of where you're at and into the undervalued areas to capture the best price. And commodities are lower than they've been since 2000, folks. We can't get around that. Again, the time is right to switch. This expansion is close enough. Why wait until the gates are already flapping open and the bulls are running through of those margin debts and credit debts? Oh, that's right. This one, that red mountain below, all that massive margin and credit debt, are you prepared? Are you diversified enough? Or are you going to continue with the financial advisors that can tell you, don't worry about it, everything's going to be fine? That's what they said in 2008. So I encourage you to stay strong, get educated. I know Cornerstone's an excellent place to start, but more importantly, just be diversified because this stuff doesn't lie. You can't get around that. So until next week, I'm going to go back into some things you're going to find interesting. God bless each and every one of you. We'll catch you then.